All right, well, we're going to go ahead and get started. It is 9:30, and so welcome. Thank you so much for being interested in learning more about Stable Kentucky and also just about ABLE accounts in general. And so my name is Carolyn Wheeler, and I am employed at the Human Development Institute at the University of Kentucky. And my co-presenter this morning is Karen Herdina. So Karen, if you just want to introduce yourself, and then we'll come back to your sharing about your story.
Okay.
So go right ahead.
Hi, my name is Karen Herdina. I live in Northern Kentucky, and I'm a parent advocate who is involved in a lot of different things. And Stables, one of the activities that I got involved in early on, just trying to make things better for people with disabilities in the state of Kentucky.
You're doing a great job, Karen. So again, thank you.
Thank you.
Well, you are. You're making a big difference. And so just thank you so much for being part of the presentation this morning. So I'd like to first make sure that you all are aware, and if you're not, to become aware of the National Resource Center about ABLE. So ABLE stands for Achieving a Better Life Experience, and federal legislation was passed in 2014 and signed by President Barack Obama. And Karen will give us a little bit of the backstory here in a minute, into law. And then the IRS had to promulgate regulations, and then states started opening programs, I'm thinking roughly in 2015, 2016. So the ABLE Resource Center has just a tremendous amount of information about what is ABLE. So you could learn about the history of the ABLE Act, about ABLE accounts, debunking ABLE myths, and then frequently asked questions. Then there's a tab about getting started. What is ABLE? Who is eligible? How can funds be used? How do I open an account? How to manage my account? Which program is best for me? So I want to be sure that you're clear. While Karen and I really think for Kentucky and Stable Kentucky, which is Kentucky's ABLE program, is a super option. We think it's the best option for Kentuckians. You don't have to enroll in Stable Kentucky, but you do have to enroll in a state where they are accepting Kentucky residents. So as this points out on the website, you could compare 3 different states. And I know we have a guest here this morning who's from Georgia. I'm not sure if that's because you have a family member here in Kentucky or you're just interested in ABLE accounts. But just know this is where you would want to go if you're wanting to open or provide information to someone who doesn't live in Kentucky. And then how to manage an account. And there really are opportunities here for people themselves to learn about financial literacy, which really ABLE is a tool for financial literacy. It's an asset development tool for people who have had a disability that began before the age of 26, but really it's in the context of setting financial goals. So there's a brief webinar here on setting financial goals. And then you could move to step 2, building a circle of support. And then step 3, making smart financial decisions. So if in your role, either in your service provider role or as a family member, these could be some really good tools to help people to really understand what this is in the context of financial planning. And then the last step is monitoring my ABLE account. So there are just lots of really helpful resources on the National Resource Center. And Adam did put the web link, just ablenrc.org, in the chat box. So now we're going to turn to Stable Kentucky. And Karen, if you'd please start and give us some background information about yourself and your role with Stable Kentucky, that'd be great. And Karen, also verify you're seeing the PowerPoint for me.
I'm seeing the picture with Senator Schroeder, and yep.
Perfect.
So in 2014, Senator Schroeder, he's the gentleman in the middle of the picture there with the green tie. He was running for office and he showed up on my doorstep, and I was telling him how it's hard to save money for individuals who are on SSI because of the $2,000 limit. And he said, well, if I get elected, I'll see what I can do. In the meantime, I ran into some other people and found out that there was a national thing going on, which were the ABLE accounts. And then, as Carolyn said, that got passed in December 2014. And so then Senator Schroeder and I got together and he sponsored a bill, and Representative Matt Denham from Maysville, he sponsored in the House. And while it didn't pass the first time, we got a lot of traction, and it did pass in 2016. And so then in December of 2016, and I believe that's the picture you're seeing there, they kicked off the stable accounts in Kentucky. And you can see the lady all the way to the far right is Treasurer Ball. And it was thanks to her and Senator Schroeder that we were able to get the stable accounts going. And Treasurer Ball did something very smart. Rather than starting our own program here, she joined with the state of Ohio, and they had started Stable Ohio. And now the stable accounts, I think there's 14 states that have all banded together, which makes these accounts very, very safe. It's not like they're going to go away tomorrow. And then Kentucky, in the last legislative session, not this one, they did another smart thing in that they have put Stable Kentucky under the jurisdiction of the treasurer. So the treasurer will continue to manage the stable accounts. That cannot be changed no matter how elections change without a vote. So we've really set up a great program here, and it was thanks to the grassroots of myself and some other family members, and the willingness of Senator Schroeder and Representative Denham to listen to us. Did I cover everything, Carolyn?
That's perfect. That's great. And Karen will be back to talk about stable cards in a bit. And I'm going to keep my video off because it keeps my internet happier. So thank you, Karen. So I also want to point out some other people in this picture, because the Commonwealth Council on Developmental Disabilities was also very instrumental in the activities that, well, some of the activities that Karen just described, again, in approaching the treasurer's office and having the ABLE Act implemented here in Kentucky in the treasurer's office. And so I just think, again, I want to give them credit. A lot of the people in this picture, well, Katie Bentley is still with the council. Some of these other folks are no longer either staff on the council, but were very instrumental at the time in helping to make that happen, including Mary Lou Underwood, who's the woman standing here, and third from the left with glasses on, who was the director of the DD Council at the time. So the presentation that I'm going to share with you this morning is actually on the stablekentucky.com website. And after the presentation, I'll show you where to find it, because don't want you to think that this is somehow secret information or that Karen and I have special sanctioning to be able to share this information. We want you, like Karen and I are stable ambassadors, actually through the treasurer's office, but we want all of you to be stable ambassadors. We want you to share this widely with families, with people themselves with disabilities, because it's just such an awesome opportunity for people. Again, their disability has to have occurred right now before the age of 26, but to save for the future. So what is ABLE? Again, it stands for Achieving a Better Life Experience for People with Disabilities. And as I said earlier, the ABLE Act of 2014 created savings and investment accounts for individuals with disabilities. So funds in an ABLE account do not affect eligibility for benefits programs such as SSI, Supplemental Security Income, or Medicaid. Now, I want to be very clear, because I'm concerned that the promo that I put out for this made it sound like you have to be on SSI or Medicaid in order to have a stable account, and that's not the case. Again, if you have a qualifying disability before the age of 26, you can have a stable account. But one of the main purposes was to protect people's eligibility for these means-tested programs. So what is ABLE? So ABLE accounts have, quote, a hybrid functionality, which is a complex way of saying essentially it's a combination of a 529 college savings plan. Well, actually, ABLE accounts are 529A accounts, but like 529 college savings plans, the money will grow tax-free, and as long as it is used for qualified disability expenses, which I will talk more about later in the presentation, then when you take the money out, there's no tax liability. It also can serve a function somewhat like a checking account, more so like a debit card, because Karen will talk about the stable card, and it provides the same kinds of protections as a special needs trust. Whereas again, the money within a stable account or an ABLE account in any other state does not count as an asset for purposes of SSI, Medicaid, and even HUD subsidy programs or SNAP benefits. So Stable Kentucky is Kentucky's ABLE program. And as Karen pointed out, it is administered by the Treasurer of Kentucky, who is currently Allison Ball. It was launched in December of 2016. And as Karen pointed out, and for which we are very fortunate, it is offered to Kentucky residents through the Ohio Stable program. Ohio was the first state to open an ABLE program, and it is a national program. So if you have a Stable account in Kentucky and you move anywhere else in the country, you don't have to move your account because Ohio is a national program. You would simply, as far as I know, just need to change your address. So what are some of the benefits of Stable Kentucky accounts? It dramatically increases the ability to save and not, again, lose eligibility for important means-tested programs. So with Stable Kentucky, people can save well over $2,000 and again, maintain their eligibility for government benefits. Additional benefits include the ownership of the account is owned by the individual with the disability. It creates new investment opportunities. And for those of you who may have already opened a Stable account, I want you to pay particular attention to this because, again, because of the tax-free growth, hopefully you would be putting your money, giving it some what we call market exposure, risk exposure, but no risk, no gain. There's the opportunity for your money to grow in a way that's smart. And so hopefully people will understand better their options and not just leave their money in what's called the bank safe option, which again protects it, but doesn't give you any of those benefits of growth. And then the tax benefit. So again, the tax benefit being that when money is taken out of a Stable account and used for qualified disability expenses, there are no taxable implications or penalties. So to see who qualifies for a Stable Kentucky account, you can take the eligibility quiz at stablekentucky.com unless you're sure that you meet one of the criteria below. So again, Stable accounts are available to Kentucky residents with disabilities that occurred prior to age 26. Now, that you can be older than 26 to open an account. When Karen talks about her son, I'm going to assume he was older than 26 when she opened the account for him. I have opened an account for the woman for whom I am a power of attorney and a representative payee who has an intellectual disability, who fortunately receives the Supports for Community Living Waiver Program. And she was 66 when I opened the account, but her disability was at birth. So she also receives, actually she now receives a Social Security retirement payment, but prior to that, she received an SSDI or Social Security Disability Insurance payment due to disability, or you receive SSI, Supplemental Security Income, or your condition is listed on Social Security Administration's list of compassionate allowances conditions, and you can find that on Social Security's website, or you're just going to self-certify. And when you apply to open a Stable Kentucky account, you do not have to provide any kind of documentation. However, you should be prepared to provide documentation should the IRS come knocking to determine whether or not you meet the eligibility criteria. So here is a definition of self-certification. Number one, you would need a diagnosis of a physical or mental impairment that causes marked and severe functional limitations. The condition has lasted or is expected to last for at least 1 year. And again, you do not need to send in a written diagnosis, but must have on hand in order to document your eligibility, should that be required. So how would you enroll in Stable Kentucky? Well, the enrollment is online and it is free. It says quick and easy, approximately 20 minutes. I would argue that's the case if you've done your homework. And I'm going to share with you, when I show you the website, what you need to have figured out before opening an account. And then you need a $50 minimum opening deposit. Enrollment can be done either by the person with a disability who is referred to as a beneficiary, or an authorized legal representative, which would include a parent, a guardian, or a person with the power of attorney. Now, a number of you work with folks who have representative payees, which means that person manages or co-manages that person's Social Security disability payment. A person who is just a representative payee cannot open a stable account. However, there is a form online where they can execute a limited power of attorney that the person with a disability would consent to, and then they can open a stable account. So again, the website is a great resource. So how do you get money into your stable account? I highly recommend that it be by the first method, which is an electronic funds transfer, meaning you're going to link a bank account with the stable account. Or you can send in a check, but hopefully you're opening a stable account with the intention to regularly make deposits. Now, the opening requirement is $50, but you're not required to put in $50 every month. You're not required to put in anything every month, but you do need to understand, and I'll point this out again, there is a $3.50 per month charge. So if you open with $50 and never put any more money into it, in a little over a year, your account would be to zero. So again, the idea behind stable is to open an account, again, have a vision for what you're saving toward, and then continue to put money in it on a regular basis. So how much money can you put into a stable account? Well, I think this is really amazing. If the person with a disability is not employed, then up to $15,000 per year from all sources. What that means is it could be the person's money, it could be parents' money, grandparents' money, it could be money from an overpayment from Social Security or from a personal injury lawsuit. So a person can have one account, but multiple people or sources could contribute to that account. If the person is employed, they could contribute an additional $12,140 per year, with a lifetime balance of both contributions and growth being the same as Kentucky's 529 college savings plan amount, which is $468,000. Now, one difference between stable or able accounts and 529 college savings plans is that one cannot contribute, for example, $100,000 into a stable account. One could contribute large amounts of money such as that into a 529 plan. So that is one difference between the two. Again, the most that could be contributed into a stable account on an annual basis, and that's a calendar year, is $15,000. And as the slide states, the system will automatically reject excess contributions. So again, if not employed, $15,000 per year from all sources. And if employed, it's up to $27,140 per year. Now, I will talk about this another time because it's so important. You need to understand that stable is not a way to shelter one's wages from being viewed as earned income by Social Security. One cannot, for example, have automatic deposit from your employer into your stable account. I mean, the money would still go into your own personal checking account, and then you're going to transfer however much money you want to into your stable account. It really is a way to protect excess assets. It's to keep you under that $2,000 countable resource limit if you are a person who receives SSI or Medicaid, and then a lifetime limit of $468,000, which includes both contributions and growth. And obviously that would take quite a long time for that to happen. Now, Stable Kentucky offers a great opportunities for people to actually request gifts to be made to their stable account. So you can set it up that an e-gift event sends out emails to friends and family for special events, such as maybe a birthday or a graduation. So you can send requests to friends and family, and then those contributions would go directly into your or that person's stable account. Again, those gifts do not affect the person's benefits, and the system will actually track the contributors so that then you can appropriately send a thank you note. So this is where, if you haven't been paying attention, I hope you will, to understand that, again, a stable account is an investment account. So you can choose from 4 Vanguard. Vanguard is one of many financial services companies, and it is highly rated, and in fact has very low what are called asset management fees, which means that it's costing you very little to have your money invested. And so these are mutual funds that range from aggressive to conservative, and then one principal protected FDIC insured option. So you can see on the slide that you could put all of your money into growth. And that might be the case for a family who has a young child with a disability, and they're thinking, we're going to put money into this account. We're not going to touch it for maybe 20 years. So we're willing to take the ups and downs of the market because we know historically the market performs very well. Or you could do as the second example shows and put 20% of your money across each of the options. Or you could do some combination as illustrated in the third example. So 10% in growth, 25% in moderate growth, 5% in conservative growth, 40% in income, which is a very conservative option as well, and then 20% in that bank safe option. So this is where you need to do your research, and I'll show you where you can find additional information from the website. So that because when you open an account, you have to say where you want your money to go. So when I opened an account for Linda, actually, I deposited $1,000. And so I'm pretty sure I did something pretty similar to the one in the middle where I just allocated 20% across each of the options. If I had only put in $50, I would have put that in the bank safe option. But then as I continued to contribute money on her behalf, at some point I would have gone back in and I would have reallocated because I want her money to grow. And so, Adam, I'm going to answer the question in a chat. I'm going to answer the question afterwards. So if you can hang on to it for me, please, and I'll come back to it. Just want to make sure I will answer it, but would like to get through the presentation and then come back to the questions. So how would you spend your money? So Stable Kentucky and all ABLE accounts the withdrawals must be used on qualified disability expenses. And that's in quotes because that's actually the reference that's made in the legislation and then also in the IRS regulations. So the definition of a qualified disability expense is that it must relate to the disability and it must help maintain or improve health independence or quality of life. So here are primary categories, and as you can see, there are many. Now, housing and rent, actually that may not relate to the disability. Everyone has housing and rent expenses, but Stable does allow you to spend money on that. And also basic living expenses. You can also use it for transportation. So someone could buy a vehicle or have a vehicle modified or pay for Uber or Lyft or paratransit services from their Stable account. For education, assistive technology. So I used money from Linda's Stable account, for example, to buy her a tablet so that she could actually participate in virtual day training programs since the pandemic. It could pay for financial management services. It could pay for health and wellness. So again, for Linda, used money in her Stable account to pay for hearing aids. And it also could pay for legal fees. And then there are many other examples. But again, bear in mind that it needs to, by and large, you've got to be able to tie it back to the person's disability and help maintain or improve in health, independence, or quality of life. So there is no cost for withdrawals. There are no limits. And importantly, what it states at the bottom of the slide, Stable Kentucky will not ask what you spend it on, but benefits agencies and the IRS can. So the way the money can come out of your stable account is, again, you do everything online. So I went back online, requested a distribution, and I have this link to Linda's and my joint checking account. The money was transferred back into her personal checking account. I wrote a check for the hearing aids. I bought the tablet on Amazon.com with her debit card. So I have a record of it. Stable Kentucky would also evidently write a third-party check, or you could transfer it onto a stable card, which, Karen, I'm going to stop sharing so you can share and now share with folks about the great advantages of the stable card.
Okay, let me get over to the stable card. There we go. Okay, so the stable card allows you, it's just similar to like a debit card. It allows you to be able to move money from your stable account over to the card so you can spend money using the card. A couple of things you should know about the stable card. One, you don't automatically get a stable card when you open a stable account. You have to request it separately. And then you also have a separate login. Okay, so you have one login for your stable account, so you can manage things there. And then you have one login for your card. And then the card, it'll take a little bit to get there, and then it takes a few days to get it all set up so that you can begin to use it. The good thing about a stable card, as you can see here, you're able to see the real-time ongoing transaction history, just like you would any other kind of credit card. You know, you can log into your credit card and see what is out there in real time. There is a spending monitor. Let me get rid of this. Here we go. There's a spending monitor so that you can, for example, stop people from like here and my sons, you know, no withdrawal from ATMs, can't get cash back at purchase time. Here we have merchant settings. You can send the categories that you don't want them to spend, like they could spend at a grocery store, but they can't spend at gambling and casinos. And then on merchant settings, you're able to add merchants, and it'll give you a long list of all kinds of different merchants that are automatically set up for you to be able to say, no, I don't want you to be able to buy from there. Or I did it just to test it. I set up a little bar and grill around the corner from where one of my sons live, and it wasn't listed. So then I was able to add, and you'll see here in the add merchant, I was able to select, let me see. Well, I can't find it.
Looks like it's the merchant you're looking for isn't on this list.
Yeah, there it is. Thank you. So the merchant you're looking for isn't on the list. So thank you, Adam. So you would put the merchant name and info in there. And then it took about 3 or 4 days, and all they said, hey, this merchant's on the list. So you're able to prevent things like that. You're also able to set up alerts. So if they were to, you can be alerted if they are spending money over a certain amount of transaction. You can alert when the card balance drops below a certain amount. And you can also be alerted on different things like blocked transactions and insufficient funds, if the card was declined, and how do you want your alert preferences. There's also a series of reports so that you can download the history. You can download all of the transactions that have ever been done, and you can put it into a spreadsheet. You can also download block transportations. You can get monthly statements. Another good thing about the stable card is that whatever's on there, if somebody was to happen to get the PIN or whatever, that's the only money anybody could ever take from you. It's not like a debit card. It's not connected directly to your stable account. It's what they call a loadable card. So you go into your regular stable account, just like you're going to move money into the bank account. But in this case, you move it onto the stable card. And so then you're able to watch what's going on with the stable card. It takes a couple of days for it to show up on the card. So it's not like you put it on there and it's on there in 24 hours. It usually takes about 48 business days or 48 hours of business days. I have found that it's very helpful. I encourage anybody who has in their plan of care any kind of money management skills. This would help tremendously with behavioral specialists trying to help them with learning money management skills. Any parents who are trying to work with their kids or trying to give them more freedom, since you're able to monitor, like you could set up at every time it drops below 50, you set it up in stable that it'll put another $100 or another $50 on the card. Okay, Carolyn, I think I covered everything.
Okay, well, thanks, Karen. So again, this is just another awesome resource available through Stable Kentucky, and another good reason to have a stable account. So these are all the things that Karen just talked about, that the stable card is a loadable prepaid debit card that can be used anywhere Visa is accepted. Again, I'll reiterate some of the things she said, that it does not pull directly from the account. You have to load money onto it. There are protections such as no overdraft, no cash access, limiting of merchants. It will track your expenses. And then these alerts to notify you to monitor the spending and if there's a low balance.
Carolyn, there's one thing.
Go ahead, Karen.
Well, explain how you don't have a stable card because Linda already had a loadable card.
Right. So I'll put a plug in for PNC Bank. This is not a multi-level marketing plan, but my joint account with Linda, by the way, if you are a representative payee for someone, you absolutely must have a separate joint bank account. I have been a representative payee for 3 different adults with intellectual and developmental disabilities. This is my 41st year. So I've been a rep payee for 41 years. I've always had a separate account. That's what Social Security told me to do. I've never commingled their funds with my accounts. So with Linda, it's with PNC Bank because I live in Lexington. She lives in Louisville. There are PNC banks in both locations. And PNC has a wonderful similar kind of feature, which is called a Smart Access card. Now there is a fee of $5 a month. So Linda has a Smart Access card. I actually have one too. And actually, that was my Smart Access card that I used when I paid for her tablet on Amazon. So I load money onto her Smart Access card and I check it every single day because it lets me know where she's been with her personal assistant or where her personal assistant staff have been now, since we're, still under COVID precautions. So I can see if money's been spent at Kroger's or at Feeder Supply for her bunny rabbit. So again, it has. I'm sorry, Adam, I'm not sharing my screen. I just assumed it would happen. Thank you. I'm seeing it. Thank
All
you so
good,
much, Adam.
all good, Carolyn. Just making sure.
Yeah, no, thank you. So I said, I'm seeing it. Why aren't you? I apologize. In any event, so it works. For me, it works like a stable card. When she goes to the doctor's office, it pays for her copay. So to me, Linda doesn't need a stable card. But again, it is a wonderful feature. Okie doke. So again, if your family member is on supplemental security income or SSI, you need to understand that if and when the balance in the stable account is over $100,000, now that would take quite a while, again, because you can only put in $15,000 a year and it's got to grow. But what would happen is that the SSI payment would be suspended but not terminated. That means there would no longer be a cash payment. Now, this would include, that $100,000 includes contributions and growth. Now, when you take money out of a stable account for a person who's on SSI, you need to know that you need to spend the money. So because if you hold on to the money from one calendar month to the next, then it could count as resources. So for example, if you're taking money out monthly to pay someone's rent, they need to pay the rent because it could put them over that resource limit the following month. And then as I stated earlier, but if you want, take a picture of this. The beneficiaries, that's the person with the disability's own wages, still count as income, even if contributed to a stable account. So again, it's not a way to shelter, get around, bypass the fact that earned income will be treated by Social Security the way it's treated, depending on whether or not the person receives SSI or SSDI, and that's another presentation. So what happens if the account holder passes away? So the Stable Kentucky account will pass to the account holder's estate. So the estate administrator, whoever that would be, would notify Stable Kentucky and can take over account access. There is no what's called designated transfer upon death, or it's also known as TOD. So you can't just put TOD to, say, a sibling or to another family member. And if the beneficiary does not have a will, which would be the case if the person has a guardian, they can't have a will, then the account will go through the normal probate process. Now, money in a stable account is subject to what's called Medicaid payback or estate recovery, but there are protections. So one is that the Medicaid payback is only from the date the account was opened, not when the person first started receiving Medicaid. So example, for my friend Linda, she fortunately qualified first for the Michelle P. waiver back in 2008. So Medicaid has been paying for services for her for a long time. I did not open her stable account until probably 2018. Well, when Linda dies, the Medicaid payback is only from the date the account was opened. Now, Linda's account's not going to have a large amount of money in it because she doesn't have a large amount of money to put into it. And in general, I put money in there from her account to save for a specific event or item, and then it's spent. Also, personally, I certainly wouldn't begrudge Medicaid if whatever's in her account goes back, because Medicaid has paid hundreds of thousands of dollars for her support in the community for a number of years. Now, there are things that you could deduct. Probably none of the folks on this presentation this morning would have Medicaid buy-in premiums because not many people are on that program, but there might be some outstanding bills such as final expenses that would count as a qualified disability expense or QDE. Or maybe they've had doctor's bills because perhaps they had an illness. And so there are going to be some bills coming in for that. And also it can pay for funeral and burial expenses. So again, please don't view the Medicaid payback as a reason not to have a stable account. And again, to understand that the main reason to have one would be to put money in, but then also to spend the money. So what does the account cost? There is a minimal cost for owning an account with Stable Kentucky. So the monthly maintenance fees, as I stated earlier, is $3.50 or $42 annually. This is deducted monthly from the person's stable account. And then there are what are called asset-based fees. And basically, this is what's charged against the money that's invested in a particular investment option. What I can just tell you is that this is practically free. This is very, very, very low. So for example, if you have a retirement account through your employer, the same thing is happening in terms of there are asset-based fees against whatever monies you're putting into your retirement account, and your employer is hopefully matching. So no, this is standard industry practice, but these fees are very low, which means that most of the money that you're contributing to your account when it's invested is working for you. So stable accounts and special needs trusts can work very well together. So I did type into the chat box and answer, I think, to Eric's question, although I'm glad here in a few minutes, if I didn't answer it well enough, Eric, for you to unmute yourself and ask me a follow-up question. So for example, if a person has $25,000, they could put $15,000 into a stable account and then put the other $10,000 into Life Plan of Kentucky, which is a pooled special needs trust I'll talk about here in a minute. Or frankly, you could put all $25,000 into the pooled special needs trust and then still open a stable account, have money directed to that account so that the person could have that money available to them directly. I believe, Karen, that your all's trust is written so that there would be regular distributions to your son's stable account. Am I correct about that?
Yes, my one son, yes.
So that again, you see how they work together. They're complementary. Again, one difference is that trusts can't accept unlimited cash. and non-cash assets. You cannot put a house in a stable account. You can also not make a stable account the beneficiary of a life insurance policy. So these are really, again, both, they're complementary, they're both important, people can have both, so they are all good. Now, some of the unique stable Kentucky account benefits, in terms of the spending power for housing and food, let's just say there's no penalty, because there could be for SSI. I'm not going to get into the weeds about that. There is no federal or state income tax on earnings, as there can be on funds that are invested through a special needs trust. And it can be established, administered, and owned by an individual with a disability. And that is a significant difference. While a person with a disability could open an account with Life Plan is still going to be the trustee, and you would have to make a request to Life Plan. And if it's over $2,500, it would have to be approved by the executive director or by the board of directors, because that's part of the fiduciary responsibility of the trust. So we're here to help. So Stable Kentucky has an 800 number, 1-800-439-1653. That's available Monday through Friday, 9 a.m. to 8 p.m. That is answered by an actual person. And then you could also email team@stableaccount.com. And then I'm now going to go to the website, because many of your questions, or everything that I've talked about today in this presentation, you can find that information here on the website. So first, up here at the top, I want to point out, this is where you would open an account. Again, you would just click on this link, and then you would be given instructions, walk through how do you enroll. If you already have an account, then this is where you log in. I'm going to just scroll down the page. So each section, for example, stable accounts give people with special needs more independence and financial security. And so here's where you can learn more about stable accounts. So you click on that box, and much of what I've talked about is provided here on the page. So if everything falls out on the pillow tonight, you can just come back to the website and everything is here. Again, the tax-free earnings, that financial benefits are not affected, and then information about the stable card. And to reiterate, as Karen told you, you have to request it. It doesn't just come when you open a stable account. Then who is eligible? If you're concerned about whether or not you're eligible or your family member's eligible, then you can click on this button, "Are you eligible?" and take our quiz, or click here to learn more. Again, again, the person's disability has to have occurred before the age of 26. That's really the very, very important criteria. So the fact that someone gets SSI or SSDI, if their disability didn't happen until they were 50, then they wouldn't be eligible. Now, Congress is considering increasing that age to age 46. However, at the present time, it is still, the disability has to have occurred before the age of 26. This also states the individual must have been living with their disability for at least 1 year, or they must expect their disability to last for at least a year. And then the other criteria that I talked about in the presentation, but it also then will give you a link to the compassionate allowances that Social Security has listed on their website. The next section is the one I encourage you to spend some time on before you open an account. So clicking here will help you learn about these investment options. And Janine, they're both. There's a monthly fee of $3.50 and then asset-based fees. They're both. And so you can look on the website. I'm pretty sure if you click on, for example, the growth option, it will tell you what those asset-based fees are. So this page is one you need to read before you open your stable account, so that you know where you're going to allocate or put your money when you open the account. And so the growth option, seeks to provide what's called capital appreciation and some income. That means they're going to be putting their money more into stocks. So it's an 80% investment in corporate stocks and a 20% investment in bonds. So again, you don't have to choose specific stocks or bonds. Vanguard's doing that for you through this mutual fund. Then the moderate growth option, which is the Vanguard Life Strategy Moderate Growth Fund, 60% investment in corporate stocks, 40% investment in bonds. So this is a bit more conservative, a bit less risky. The conservative growth option, 40% investment in corporate stocks and a 60% investment in bonds. And again, if you read this, it explains what stock ownership means and what bond investors. So again, it will help you to become more fluent or knowledgeable. And then the income option. So that's 100% of its funds in this Vanguard Life Strategy Income Fund. That's 20% in corporate stocks, 80% in bonds, and then the bank safe option, which is essentially like a savings account. So again, you won't lose any money, but you also won't gain any money. So it is the lowest expected return and the lowest expected risk. Now I can tell you, and actually, Karen, if you like to give some of the data about maybe the number of accounts we know we have here in Kentucky. One of the things, though, before she does, that disappoints me a bit is that we have a number of accounts that have no money in them. So really, when you go to open an account, be sure to be ready to put money into it. And then also we have a lot of the money in this bank safe option, which to me is just a missed opportunity. It's just a missed opportunity for market growth. So Karen, you want to share a bit about at least what we know about the number of accounts here in Kentucky, or the number of accounts in the 7 counties region, since this is also being.
Yeah, so
yeah.
Oh, 1 second, really quick. We did have a quick question off that last section. Karen Corey asks, so all money from SSI or an employer goes into a regular checking, then the money is transferred to the stable account?
Well, however much money you want to. I mean, typically you'd need some of that money to pay room and board or to buy food or to buy clothes. So it's not all, I wouldn't think. So you make a decision, like you might want to put $100 a month into a stable account. So again, it's based on how much, I would just call it maybe discretionary money, that the person doesn't need in order to live, that you then could put into a stable account. I didn't see that question, so thanks, Adam. Okay, so go ahead, Karen.
hang on a second, let me get back to that. So in 7 counties, as of January 2021, they had 325 accounts. And we're edging towards 1,000 accounts, I believe, aren't we, Carolyn?
We are moving in that direction. We are moving in that direction, yes.
And I didn't have a chance to total up all the accounts. So, but there are over 325 accounts. And as a matter of fact, in 7 counties, those counties there had a growth of 37% from January 2020 to January 2021. They grew 119 accounts just in that year. So, now a lot of that has to do with Jefferson County, and you'll see large amounts of accounts in the more populous areas, but there's other counties that are growing little by little. So we just got to keep getting the message out there. And I think a lot of growth came last year because of the stimulus checks, because I know as soon as the stimulus checks hit my boys, they went right to the stable account.
And also unemployment insurance, Karen. So thank you.
Oh, you're right. I forgot about that.
I mean, there were people receiving $2,600, $2,800 a month in unemployment insurance. And so think about the $1,400 stimulus check. If your family member got that, again, there may be things they need to buy, they may need, but if they don't, opening a stable account and at least putting some of that money in there to save for something they might want for the future or for a rainy day would be, to me, a really wise and good idea.
And just to add, I mean, I know of one young man, Carolyn, you know him as well. His family's saving for a house.
Yes.
To build a house, I believe, on their property.
That's correct.
And, with my youngest son, we hope to eventually buy a car. So the adult foster care person that he lives with will eventually have a car that's all paid for.
So there's just lots of exciting opportunities with stable accounts. So again, these are some examples of qualified disability expenses. Just remember that the person or the person's legal representative is responsible for having documentation for that expense. So for example, for Linda, I have documentation for everything that I've used money from her stable account for, should the IRS come knocking, or should, now it's more just Medicaid, because the benefit she receives from Social Security actually has never been concerned about resources. But Medicaid that pays for her supports for community living waiver services would be. So I have documentation to show what I've spent it on. But again, go ahead, Karen.
And that's another good, I forgot to show it when we were talking about the stable card, but that's another, they have a new functionality in the able accounts and the stable card where you can load documents. So you can save the documents to the accounts.
Oh, that's really cool. Maybe I should figure out if I can do that, Karen, without the stable card. But anyway,
I think you can do it now on the account as well.
Well, thank you. I'll check that out. I would love to be able to do that, to have a more permanent record. So if you still have questions, again, there's the 800 number, 1-800-439-1653, or email team@stableaccount.com. And on the bottom of the page, I can click on resources, which I'm doing. And then you will see, again, we're wanting all of you to be stable ambassadors. So you can click on a flyer. There's also a flyer in Spanish. The PowerPoint presentation, it may not be the one I showed, but there is a PowerPoint presentation, both in English and in Spanish. Evidently, I believe that with state employees, and I'm not positive, but there must be a way to, I'm assuming what this is you can open a stable account for your family member and then have money from your paycheck directly deposited into the stable account. There would be great if other employers figured out how to do this. Here's the Stable Kentucky Power of Attorney form. So if you're someone's representative payee, but you're not their parent, you're not their guardian, or you're not their power of attorney, you can use this form so that you have the authority to open the account on behalf of someone. And then here's where you would request a stable card. And then at the bottom of the page is a longer, or is another webinar, about as long as this one, that was done by folks from the Ohio Stable Program. That's Treasurer Allison Ball there in the corner. So again, want to share that with families or with others or with staff. Also, as Adam said, we are recording the presentation this morning, and we will be posting the link, and we'll endeavor to get that back out to all of you. So it's 10:22 Eastern time. Would love to see if there's some other questions. You're welcome to type them in the chat box, or really you can also, I know we have about 72 folks in the room, but it's fine if you want to unmute yourself. We'll just try not to talk over one another. Thank you, Adam. Adam will make all that happen to make the video available on YouTube and be captioned and shareable.
I didn't see any other questions pop up either directly to me or to the entire group, but feel free to go ahead and speak up or just message us in the chat.
So William, thank you. I forgot to talk about Life Plan. Thank you. It's right here in front of me. So in that situation, William, a person could go to Life Plan of Kentucky and open an account with Life Plan of Kentucky. So Life Plan of Kentucky is Kentucky's pooled special needs trust. So it's a nonprofit. Life Plan can serve as a trustee for both first parties. So that would be the person with the disabilities money. So that person who inherits the money, or third party. So for all of you who are out there that I hope haven't left yet, who work with families either through as you're a case manager or you're a support broker, please let people know about Life Plan, because they could open an account with Life Plan, leave it empty until they die, and then direct their will or have a life insurance policy that could fund it.